What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Labs. Welcome back to another great week in the markets, another great start, another great Tuesday. Welcome to our live market analysis where we break down all of the hottest charts and tell you all of the levels that you need to look out for this week. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Ty Trades Futures, and of course, I'm here with my guy.
You already know who it is. It's your boy. I'm the D guy, aka Pro Financial. I hope you guys have your notebook and have your pens and ready for tonight because we're going to be pointing out some very important levels this week so we can execute some great trades. So, with that being said, let's just hop right on in.
All right. So without further ado, let's go ahead and get right into our analysis. Before we do that, let's just go over our calendar for this week. Not too much of anything going on unless you trade NQ, but CPI, that doesn't really make a big, huge splash. But other than that, Canada traders, look out. ECB on Thursday for all my European traders, so that might be important. Probably will be. But go ahead and make sure you guys check the calendar on your own discretion at your own usage. But anyway, let's go ahead and get straight into our analysis. So since it's the beginning of the week, let's go ahead and start off on our weekly charts. Now, today I want to do the same pairs as usual, the S&P, well, not the S&P, the Dow Jones, the US30, aka, and also dollar Swiss, and a little surprise cryptocurrency towards the end of today's session. So make sure you stick around. So let's go ahead and break it down. All right. So looking at our weekly chart, one thing that we can clearly gauge from just an overall glance at the chart is that the trend is definitely up. And as we've been saying on a lot of live streams so far, the Dow Jones and other stock indexes or indices, whatever you prefer, have a tendency to go up. If you look at the history of the chart since the time they came out, this is typically what they've tended to do. They have pullbacks, they do have sell-offs, but in a longer term picture, they do move up. And last week, we had continuation of the overall uptrend. Notice how we haven't had a down week on the Dow Jones since March 15th. So for 4 straight weeks, a whole month, we made higher highs and higher lows and continued to move up. Now, if there's one thing that you learned about any chart that we've ever taught you, is that nothing will continue forever. There has to be pullbacks in the market. And whenever you see a market start to run away from you and it feels like it's never going to be a pullback, watch out for when you go long, because that's when the market is going to pull back and the sell-off is going to come. And that's kind of what we're looking at right now when we're looking at the Dow Jones. We're in the middle of a pullback. Now, on the weekly, it doesn't look that significant, right? Because it just looks like, a down candle like this one was from March 15th. But if we analyze everything that we're looking at, this weekly area actually going to play out to be something a little bit more serious when we break it down to the daily chart right here. Now, in terms of market structure, remember how we talked about that last week during our streams? Make sure you go check that out if you haven't had the opportunity to. But basically, we told you guys that during market moves, especially uptrends, you typically like to see prices make higher highs and higher lows. Now, your higher lows need to come back, and they need to test a previous level that used to be a high in the market. So if we analyze our chart and pick out the highs, the first one that we can see is this high right here at 33,225. The next one I would say is 33,650. The next one would be 33,800. And of course, the final one, the all-time high, would be 34,275. Now, all we need to do is identify our previous resistance levels. Now, since we have already done that, all we have to do now is mark them up. So we already have 33,800 as well as 33,650. Now, when we pull up our support and resistance and all of our zones and support areas, we can see it a little bit more clearly on the chart. These levels have held up before as intense resistance before and as well as support. So now that prices are making their way back into those specific areas, we should expect some type of reaction around those levels. Based on what we're seeing right now, I wouldn't be surprised to see prices come back down and test the top of the zone at 33,600. So that's the ultimate price that I'm looking for this week. But don't get me wrong, it could definitely go a lot further than the top of the zone. I'll bring that back up. And let's actually measure where we are. We're at 33,800 right now. We're about 225 points away from this level. Now I know you probably hear 225 and think that, that's not, or that's a lot of space away from the Dow Jones, but when it comes to the US30 and the Dow Jones, a 225 point move can happen like that. You could go to bed tonight, wake up tomorrow, the market could be back down to the bottom of the zone. So don't think that because the area is so far away that it can't happen. This market could easily run back down into the bottom of the zone. But because the uptrend is so strong, I'll be looking for a bounce off the top of the zone. Now, of course, remember, we always tell you to look for confirmation. Just because prices come back and they hit your order price or they hit the price that you're looking at doesn't mean that you get into the trade right then and there. Hitting your price and hitting your levels is only the first part of your overall trade process. That just tells you that you need to put your antennas up and start to look for your trade. When we see prices come back into these support levels, we need to see a higher high and a higher low. Now, if you're an aggressive trader or conservative, depending on which one you are, I like to just look for a higher low. Once I see a higher low, then I go long in anticipation of the higher high. But if you want to be more conservative, you can wait for a higher high and a higher low, but just understand that more than likely your upside potential is capped a little bit. But either way, you should be successful as long as you look for confirmation. One thing we don't want to do in these sell-offs and pullbacks is get too caught up in the overall uptrend, because the uptrend could go up for weeks and weeks at a time and then pull back for 1 week. And if you trade the wrong way and you just trade with overconfidence and thinking that you understand the market, you could get back all of those gains. So we always want to tread with caution in times of pullbacks like we're seeing right now with the Dow Jones. So that pretty much wraps up my analysis. I'll break it down to the hourly chart to make sure that we haven't missed anything. Now, last thing I want to point out to you guys was, let's analyze how this downtrend started. We had an uptrend, higher highs, higher lows, for sure, for sure. But then when we came to this high level at April 16th at 8 o'clock in the morning, we made an all-time high at 34,000, around 275, 250-ish, within that area. Since that time, we've made a double top, lower highs, lower lows, lower highs, and lower lows. And we're continuing to see lower highs and lower lows continuously form. So we know from our market analysis classes that we taught you guys so much that whenever we see lower lows and lower highs, no matter what we want to think about the chart, we have to lean towards the short side because that's the dominant trend at that specific time period when you're looking at it. Now, from a longer term perspective, of course, we still love the long trade, but right now, based on how we're looking at how I'm looking at the market, I'm seeing lower lows and lower highs, so I got to stick to the short side for right now. Now, me personally, I'm not looking for any short trades because the uptrend is so strong. I'm really just waiting for the sellers to come in, do what they do, waiting for the buyers to step back. When they step back, I step back. Not saying that the short trade can't be had because it's definitely there, but I'm sticking to the long side for sure. So, with all that being said, that wraps up my analysis for US30. So let's pass it over to the D guy and let's see what he has to say about this chart right here.
All right, take away the volume too. All right, so he knows the drill. So the first thing we want to do is make sure we want to cross all our, dot our I's and cross all our T's. So we want to, still do the top-down analysis, even though we know that, not too much has changed because each candle on the higher time frames are literally months and weeks and days at a time. So weekly, we're just trying to make sure, the high has been broken at the 32,000 level. The most recent high was broken. Continuation up to the upside, the 20 above the 50. So that's the only information we want to take from this high time frame. Let's drop down to, matter of fact, let's go to the monthly one more time too, just to make sure. Okay, so the 20 is above the 50, higher highs, bet. So we're going to drop down to the daily. And now, by the time we get to the daily, we should definitely have figured out which direction we want to lean towards. And just how Tiberius said, being that the uptrend is so strong, it will be really hard for me to tell you guys to or encourage any short selling right now, just because the short selling move that I was going to advise would be it's already at the area in which I thought it was going to come down to. So I see it coming down to pretty much all the red patches. If pretty much it can break the level we are at right now, then I can see it going down to the next red level. Yep, and so forth and so on. So pretty much where we are right now is a very important level, and I actually like that box or zone that Tiberius drew on a lower time frame. So go to the 4 hour. All right. So actually, where it came down to, and we have that wick at the bottom. If you follow that right across, it lines right up with highs and lows, or that nice duality level. Yep, those lows. Yep, and that high right there. So that to me really sticks out. And even if you kind of follow it all the way over again, that green candle over right. Yep. Oh no, you passed it. Oh yeah, actually that one too. So that one and that one. So that low of that one and the high in that one. Yep. So that area right there is a strong duality level because a lot of the lows and highs are lining up. So if it breaks that area, I can definitely see it going down for a little bit. But being that I don't really see it going down just because the overall uptrend has been so strong, I think that this retracement or this pull down that we're kind of been anticipating is now over. So let's drop down to the 2 hour. Go to the 1 hour because I think that's where that zone is drawn out on the 1 hour. On high just signals, that's what it was. Okay, that's what I was looking for. All right, so as you can see, the zone where he has it, is actually lined up right perfectly on the 20 moving average. But what kind of worries me just a little bit, not too much, but that it broke the level that the zone is across right there because it has the low lined up with a high and it looks like a very strong area of resistance. Being that we got a strong push of that, I can definitely see if we're going to push down a retracement up to retest that level. Like, are you sure you want to do that? And then if it agrees, I can only just see it going back down to the second purple zone. So with that being said, I think where we are right now is we're just going to be pretty much seeing higher highs and higher lows, respecting of this level right here. So the 33,800 level is the level I think is the market is really going to respect. I just feel like, yeah, it's going to be pushed. It pushed through the 33,800, but it never had any enough strong momentum to have a complete closed break candle over that green line. I think the only one was that red one, but the next candle after that was a bullish engulfing candle. So that bullish engulfing candle actually kind of exited out that red candle, showing that, yeah, the down move is down, but the buyers stepped back in really strong. So if we can get the break of the structure of the highs where we are right now, those highs, yep, yep, those highs right there. If we get a break of that, that would be considered a break of structure. And then I will be looking for a retest at that level to continue to take it back up. So just to conclude, before I conclude, go to the 5 minute. Yeah, so it looks like it's just the high those it's just forming a lot of highs at the 33 840 level or the 850 level. It looks like the highs are just being formed right there. So if we can get a break to the ups to the those highs up there and they break and they retest right back down to the top of those levels like a retest, then I would agree to take it up. But for some reason, I feel like possibly the down movement is not over, just because it had no momentum to break the highs where I pointed at right here. So I'm just going to be a little bit more patient on this one and wait for a little bit more confirmation. But the area that I am kind of honing in on is a 33,850 level. Those high areas up there, I want to see what the market does when it rejects where we are right now and heads up to the top of those highs. And also, I don't think, to me, the down move would be possibly good enough to chase. Just see how many pips it is from where we are right now to the bottom second zone at lower. So go to like the 15. Or try pull in that the second purple zone you have at the bottom. Put that into the frame. Oh man. Sorry guys, give us a second. We got a little bit of Wi-Fi tech difficulties. Tiberius should be popping back anytime. We're waiting on Tiberius to top back in. Just give us a second, guys. He's going to be right back with us. Let's see what's going on. Yo.
Yep.
You here now? You back?
Y'all hear me?
Yeah, we hear you now. You was froze for a little minute. Go to the 2 hour. Because where's the other purple zone that you had? You had 2 purple zones. You'll get that one. So see how many pips it is from where we are right now to the top of the purple zone. And then the bottom of the purple zone. From where we are right now to the top of the purple and then to the bottom of the purple. No down. So about 200 pips, and then do the bottom of the purple. About good 420 pips. So, like I said, both you can make money on both sides of the market, but you just have to know when and where to get in at. Me personally, I want to stay on the side of the dominant, which is the up move. So I would pretty much be waiting for the break of the structure at 33,850, a retest there, and a continuation back up. So that's my analysis.
Right. So overall for US30, I would say that buyers, you got to be a little bit cautious. Trade lightly, trade smartly. Don't overdo it. Don't overtrade. Just wait until the market lines back up with your overall direction before you get in. Patience is everything. So that brings us to the next pair that we have on the docket for tonight. And that brings us to the good old dollar Swiss. So let's go ahead and start our analysis right now. So since it's the beginning of a new week, just like we did with the Dow Jones, we'll look at the higher time frames for dollar Swiss as well. Now, if you guys have been on the stream for a while, you already know what I'm about to say. But for all of my newcomers, we can come back to this point at 2019 from April 22nd. Now, ever since this point at $1.02, prices have been in a very nice downtrend, making lower lows and lower highs continuously, all the way down until they reach the ultimate low of around 88 cents. So that's around, I want to say, a 1,400 pip move almost. Just about 1410. That's a huge move on any currency pair, especially dollar Swiss. So that tells us that this pair is very volatile, and it gives us an overall direction for the longer term trend, which will help us when we break it down to the smaller time frame. Now, as we can see on the weekly, prices had a nice little retracement back to the upside for a good 3 to 4 months. This right here, all of this happened down in January. Now, we were in an uptrend, relatively speaking, all the way up until we got to March 29th. So pretty much the end of April. Now, ever since April has started, the market has reversed like crazy. We initially had this bearish engulfing on a weekly chart, so that makes it even more significant. And then we also had continuation to the downside after that bearish engulfing got formed. So just looking at the weekly chart, I can see that prices are definitely strong when it comes to the selling side. But at the same time, just like we were telling you guys about with US30, nothing can move up or down forever. There has to be pullbacks in the market. So if you're in a downtrend, if you remember from our market analysis classes, our market structure classes, we talked about how in a downtrend, you need to see prices come back up to retest what used to be a last low. So for us in our scenario, our last low is located at 92.25. So keep that number in mind, because that will be important throughout the rest of this analysis and throughout the rest of the week, because that will be our projected target, well, our projected entry price. Now, notice how when we pull the chart back up, 92.25 lines up with the bottom of what used to be a consolidation zone. So consolidation zones are really nice on any chart, because once prices break out of that consolidation, all you have to do is wait for the prices to come back up, retest it, and get a rejection. Once you see the retest and then you see the rejection, then you can feel confident hopping back into that short trade. And that's what we're looking for overall for the dollar Swiss. Now, the only thing that concerns me is the fact that the pullback may not come back up to that level. Because remember, in the market, that's what you want to look for. That's typical market structure. But sometimes when a trend is strong enough, prices will come back to a level of resistance that's not located at the last low, and then it'll continue to move. And in order to find those levels, you really have to break the chart down to lower time frames like the hourly and the 4 hour. So let's start with the hourly time frame and let's bring back up all of our support and resistance levels to help us out a little bit. So as we can see, since March 29th, we have been making a continuous pattern of lower lows and lower highs, consistently moving down the chart. We have had no type of upside momentum at all so far in this market, outside of these little minuscule pullbacks that we have seen. So, if we're looking at the chart based on what we see here, we have to continue to observe and expect what we've already been seeing in the past, which is lower lows and lower highs. So, I would honestly be looking for prices to come back up to maybe 91.80, 91.75 ish, somewhere in between that area, and then see prices find rejection right there. Because if we look at how these prices have been moving so far, there have been few occasions where they've actually pulled back up all the way. Usually they come back up to a level that used to be resistance. Now, if we follow where we're at right now and we find the relative market structure top, which is located right here at this area, 91.75, notice how that kinda, not exactly, it's not perfect, but it lines up with our overall low at 91.80. So if the low for this candle is 91.79 and the high for this candle is, let me see, 91.69, that's 10 pips away. Now, in some cases, you won't have prices come back and test your number exactly in the market. And you have to know when to pull the trigger and when not to. Now, for me, this kind of borders on the edge of my rule that I have called the good enough rule. Basically, it means it doesn't have to be perfect, it just has to be close enough. But 10 is my maximum amount that I go up for. So it's 10 pips away. So for that reason, it qualifies under my close enough reasoning when it comes to participating in the market. So to me, as long as prices don't break back above 91.75, we should be good and we should look for prices to continue lower. Now, on the flip side, if they are able to break past these levels down here at the last low at 91.75, then you can look to maybe take the short trade at an even better level at 92.25, the level that we were talking about. So overall, the two levels that I'm keying on for this week are 91.75, which is kind of where we're at right now, and best case scenario 92.25, which would be the retest from the higher time frame. So keep those numbers in mind. Right now, this week, I'm definitely leaning more towards the short side just based on the trend, but anything can happen in the market. And I'm interested in getting different perspectives on this chart. So let's pass it over to my guy, Darren. Let's see what he has to say about good old dollar Swiss.
So clearly, as we can see on the daily, the head and shoulders we were hoping to form didn't form, and the intuition that I had breaking into that channel again was right, and I felt like being that it broke back inside the channel, I felt like now the market was going to be moving down, and it breaking those bottom structure at around 92.25, those bottoms. Yep, those lows there. Being that it broke those lows there, and it looked like we kind of got like a little retest when you follow over to the right, because it broke it, came back up, retested it, and then pushed back down. So with that right there, let's start back at the monthly, and let's just make sure that my analysis here matches up with everything on the higher time frame. So ultimately down, we're in a strong down candle for this month. It looked like it retested right off of the 20 moving average, so we're down below the 20 moving average. So as long as we stay below the 20 moving average, I would definitely agree. The short is still active, so pretty much the 20 is below the 50, and it made its first leg of the lower high and the lower low. Let's drop down to the weekly. Same kind of deal. You know the 20 is below the 50. It looks like it made a low, but it pushed up and broke that high structure. But also notice that pullback that it made and broke that structure came back up and lined perfectly with that low to the right, just below, just a little past 2020. That low, yep. being that the market came up and kind of pulled all the way up for a definite pullback, if it can stay below where we are right now, or even stay below the 50 moving average, I would definitely be all in for the short. And hop down to the daily just to make sure I get the confirmation. Yes, no. So actually, it doesn't still really line up for me. Just because on the daily, the 20 is above the 50, and anytime the 20 is above the 50 and it doesn't line up on all time frames, that lets me know that this market is still in a little pullback, and we want to be patient on this and wait for our confirmation to happen. So with that being said, I'm going to say I'm going to be patient on this one and not take any trades just because it don't all line up. I want the trade to come to me. So on high, the moving averages. On high, the moving averages.
They're already up here.
No, the signal. Excuse me, the signal.
You need a new one.
Okay, perfect. All right, so with this on the daily, drop down to the 4 hour. So the 4 hour kind of gives me a better picture in terms of where the market is. It's down below the moving averages, and it's still showing lower lows and lower highs on the time frames. Go to the 5 minute one more time, or go to the 5 minute one more last frame. Yeah, so pretty much a majority of the time frames that I've went to, the 20 is below the 50. So with that said, zoom into where we are right now. I feel like I kind of see an inverse head and shoulders, but I don't know if it's forced. Uh, no, it's really not. I'm just gonna go off of the double top that we just made, and the rejection at the moving averages. So with that right there, if we can get a break of those bottoms at the bottom area where we are right now, so go to the bottoms. Not that one, the one over right there. If we can get a break of that one, I will be all in for the down move. The only reason why I didn't say the lower ones where we are right now is because, to me, it can pull down to that low area and have enough momentum to go up. But if it breaks the low where we are, where I just pointed out to, I feel that that's a little bit more stronger, and there's stronger duality levels there. So, go to the 15 minute. Yeah. Yeah, I would wait for the break of the lows, not the one we are right now, but right around 9150, 9150 up. So if we get a break of those lows down there, I would definitely want to bring it to the bottom of structure, all the way down to like the 91 300, somewhere around there. But I'm all in for the short on this one, even though the higher time frames don't all line up in terms of the moving average. But I feel like on all the other lower time frames, the lower lows are showing. The moving averages are lining up as terms of the 20 being below it, showing that the bears are in control. So go to the 1 hour one last time. Yeah. So I'm gonna be patient and wait for the lows where we are right now. Those lows, and you pull that price all the way over to where it lines up with that green wick. So go to where we are right now. Now slide it all the way over. Right there, that green wick. If we can get it to kind of, it's kind of below that area right now, but go to the top of the body of it, that candle. Okay, yeah, if we can get the break of the top body of the candle, I'll be valid. But where we are right now is a good area to hop in because you want to buy low, sell high. So we are at the highs of the structure where we are right now. So if we can even possibly take it at where the high of the wicks are at, all right, where So now push the price all the way back over to the right. Yep. Now bring it down a little bit to sit on top of the bodies. Yep, right there. So if we can get kind of price to come back up there, reject there, I would kind of be all in for the short. So that's my analysis.
All right. So there you go, good people. Those are the levels that we want to look out for dollar Swiss this week, as well as US30. And you know we love to give you an overall broad base of what's going on in the market in general. So Darren has another two pairs that he wants to share with you guys. So I'll pass it over to him and let him break it down for you guys as well.
So, can you guys see my chart?
Not yet.
No. What about now?
Yep.
All right. So the first pair we're gonna start with is AU. Let's kind of start with the monthly. Let's kind of just move these over. So pretty much what I was saying before was this pair was strong in terms of I felt like it was going to go down, but it needed to do a nice little retracement before it did that. So with any good down move, we need an up move to happen. So it looked like the market came into this zone. So actually, let me pull this in so you guys can really see these zones that I put in a long time ago. So I felt like if the market could kind of do something what it did here, which was come into this red zone, find rejection somewhere up here and begin to push down. If we can get the market to kind of do the same thing, it would be great to bring it all the way back down again. But if it does not, we can definitely expect the market to come back up to the top of the green zone. But we would definitely want to be patient and wait for the break of this structure here. So we want to be patient and not rush the trade, because honestly, I still feel like it can kind of go either way. And when I say either way, as far as like the 20, 25 pips you can go, because I feel like even if you did go for the short, you can probably get it up here and bring it back down to the bottom of this red box, or to the bottom of the red box and bring it all the way down here. But I feel like since it came all the way down here and from here it's been making higher highs and higher lows, I definitely expect the market to start making its way up to the next red zone, just because it's been playing enough down here. It even touched the red zone, and then now it got out of there. Whatever was down here, it didn't want any parts. So let's drop down to the weekly. So with the weekly, when we zoom in a little bit, actually the 7 is above the 5th. The 7 is above the 65. Oh no, 7 is below on the monthly, and the 7 is above on the weekly. The 50. Why I keep saying 50? 65 moving average. So that right there kind of lets me know things are still probably in retracement modes right now. But like I told you, ever since it touched this red box, it's just been making higher highs and higher lows. It hasn't really come down all the way. Oh, actually, this red candle right here actually hit this high. So this was the retest that a lot of people were waiting for. Like I said, just to be safe, I like to add like an extra 5 or 10 pips on my entry, because sometimes the market may not come down all the way enough. Possibly in this type of example right here, where this red candle didn't touch this exactly, but this was the area it wanted to retest. We got a nice little wick formation up here, so this kind of lets me know maybe it's trying to come down and maybe retest this level that it never had a chance to before, or it was just going to respect this level here at these lows here and then continue up. So let's drop down to the daily. So with the daily, kind of lets me know, even though the weekly and the daily kind of say the same thing, as far as the moving average, the 7 is above the 65, but the monthly is the only one with the 7 below the 65. So that kind of lets me know that's probably the dominant direction. So for me, I want to be a little bit more patient on this one, because I really want to go on the side of the monthly and go short. So for me, I like the positioning where we are right now. If we got the retest here, so if we can get the break of this low here, I would definitely want to take it, possibly down here, but I want to be very patient on this one, and I don't want to rush it. And for some reason, I feel like it could possibly just come down to this 65 moving average and then continue up, and that this was just nothing but a consolidation time or period in the market, and that it never really had no intentions on going down whatsoever. That once it hit that low red box, like I showed you on the higher time frame, it was going to now continue up. Let's look at the 4 hour though. So, like I said, the 4 hour is still kind of respecting this area right here. So, I just, like I said, I want to be patient on this one. I want to see what the market does where we are right now and break this little zone here and make its way down. But I know for any down movement, before it breaks this level, it has to come out, retest the level that it just broken, and bring it back down. So ultimately, somewhere around here is where the area I will want to hop in for the sell, even though I should try to catch it somewhere up here just because I want to follow the rules of buy low, sell high. So when I drop down to a smaller time frame of the 15-minute, this high right here lines up with this low. And then from there, it's been kind of like pushing down. But it's still been sitting on this blue zone, which lets me know this area could be possibly strong. So for me, I want to be patient and just don't want to immediately hop in. But I definitely want to lean on the side of the buys now. I want the market to pretty much break this area here, kind of respect this, make its way back up here. First break the 7 moving average. Yeah, 7 moving average. And mind you, look where the 7 moving average is lined up with. That is one of the reasons why I wanted this area to be broken. That would be one confirmation. A second confirmation is staying above this zone here. And then the third confirmation would be the first leg of the higher of breaking this structure. So that's what I'm kind of looking for. I felt like if it was going to go down, it should have happened somewhere over here. But being that it played around in this area and respecting it, it could be making its way up. But when I just look at previous movement, kind of what it did here, it was in this area and played around for a very long time. It never broke. It did break. Yeah, it never broke these highs up here. It just pushed down but respected this level. And then from this level, it just shot up. So maybe we can expect the same thing. It's still been sitting on this level. So for me, I want to be patient and want to wait and see what it does from where we are right now. Yeah, so I think for me, I'm going to be on the side of the buy until it breaks this blue zone. If it breaks this blue zone, then I will be looking for the short. But until then, because it's been playing on this zone for a little bit, I'm going to be looking for the buy. And you want to buy low, which would be somewhere down here, and take it as high that the market allows me to take it. But I want to definitely have a tight stop if I buy. So if I do have a buy, I will put the stop maybe at the highs up here because a buy, yeah. So if it goes against me and it goes down, so yeah, I will put it down here. I'm sorry. Because if it was going against me and I'm buying, it would be selling, going down this way. So I would have my stop down at this low. If it breaks this low, I had no business being in it anyway. And this was the prediction that I had, that if this area got broken, we can definitely expect the market to go down because it's been really respecting that level for the most part on higher time frames. It just never had no momentum to break this level. So yeah, I'm just gonna kind of sit back and watch what the market does. So I know I said a lot, Tiberius. Tell me what you're thinking, bro.
All right. So for AU, let's pull it back out to the daily chart and let's get a clean picture. Can you fit the chart? All right. So actually hit the little circle button down at the bottom. There we go. So for AU, basically the same setup that I've been kind of harping on for the past 2 weeks is still within that general area. And I'm talking about this overall head and shoulders that I'm seeing on the chart. The overall head is located at 80 cents. The left shoulder is located at 78 cents. And the right shoulder is located at the same area, just overall to the right a little bit. Now, what we've done is very interesting because I remember last week we came down to the neckline. Now, usually with a head and shoulders pattern, if the neckline does not get broken, now the neckline just simply represents basically the bottom area of the overall pattern itself. So that's the neckline right there. So if the neckline doesn't get broken in the head and shoulders, and you take into account the fact that you're in an uptrend, it could usually mean that maybe the sellers do not have enough momentum to push prices back down past that level, and that the uptrend is still valid. Now, that doesn't necessarily mean that the overall retest is done for. It just means that time that the prices came down to the neckline, they couldn't break through. But as we've seen so far, prices have rallied. They have continued to move up, bouncing off of the 65 moving average. That's a good thing for sure. But what I don't like and what concerns me is the fact that the last wick that we made to the upside on that red candle, it came and lined up not with the wick from the right shoulder, but from the bodies from the right shoulder. So really, the right shoulder hasn't been violated. The head is still present. The left shoulder is present, and so is the right shoulder. Now, I know a lot of times when we see head and shoulders, we think about the textbook definition where it's one head, it's one left shoulder, and one right shoulder. But there are also, I want you guys to go research this guy called Thomas Bulkowski. Thomas Bulkowski. He's the writer and the author of this book called Encyclopedia of Chart Patterns. Very good read if you get a chance to check it out. But basically, it's also something that's called complex head and shoulders, because we know in the market nothing is going to be perfect. When it is, take your trades, but most of the time it's not going to line up that way. There will be times and occasions in the market where you have multiple shoulders that get formed. Now, here's the thing. Multiple shoulders is okay as long as prices don't break back above the overall shoulder level, which we see right here at 78. So the fact that prices wicked off of those levels and are continuing to move down definitely concerns me. And if we look at the top that we made since we made that head, we're still in a process of making lower lows and lower highs, because technically we don't have a lower high. A higher low. Let me reverse. We do have a higher low, but we don't have a higher high that has been established. So the uptrend is not completely back in swing just quite yet. It's almost getting there, but it's still enough signals on the selling side for me to be very cautious. So let's break it down to the hourly chart, because I want to see what this last wick that we made on the daily. Actually, switch it back to the daily for a quick second, because I wanted to show the people that the candle that we just made actually is a bearish engulfing, low key. It's not the strongest, but we'll take it for what we have right now. So let's get back to the hour. All right, man. So yeah, coming off of the last right shoulder that we just recently made at 78.20, we've been continuing to make lower lows and lower highs ever since we made that ultimate high point, at least for that time period being. Now, we see prices moving below the 65 moving average. That's a very bearish sign. If prices stay below that level and continue to make lower lows, then we should definitely start to look towards the short side, and I would agree with Darren. And if you can show your support and resistance levels, I like that blue zone that you had. I think that would be my target as well. I would be looking to take prices back down to the bottom of that zone if I get the chance to see prices break the low that we're at right now at around 77.14, 77.20-ish. So if we get down below those levels, definitely I'm looking for the short. And let's pull it back up to the 4 hour, because I want to make sure that we don't miss anything. One thing I never want to do is ignore the other side of the market, because we do know that the overall trend is up. So we always want to watch out for what the bulls could be doing. And honestly, the only thing I could see the bulls maybe do is find support at the bottom of the blue zone because that area represents what used to be a previous high in the market. And if markets in an uptrend are following market structure, they should pull back to what used to be resistance. So, in my opinion, that's the last frontier for the bulls. If prices get down there and get past it, that's definitely a thumbs up, a double thumbs up for the sellers. But before we even get there, look at the zone that we're hovering at right now. We're making a triple bottom right now if you look at where we're at. So whenever you see something like that, that kind of indicates that, for one, buyers are definitely showing support down at those levels and buyers are accumulating their positions. But anything can happen in the market. And because we've had such strong momentum on the selling side coming into that zone, I think that we could still have a little bit of potential to push past it. So, in my opinion, for the buyers, the only thing that would make this market turn back around in their favor is if we either get a bounce from the zone we're at right now or a bounce from that last high located at the bottom of the blue zone at 76.60. So as long as prices are above that level, I still got to give it to the sellers. But once we break past the zone we're at right now, I would feel comfortable taking the short trade just temporarily back down to the bottom of the blue zone.
All right.
And then before I go, overall, I would just say keep the head and shoulders in mind. Yeah, we can take our little small trades here and there, but remember the bigger picture. We're trying to wait for the bigger move for this pair. So keep your eyes open out there. Be patient. You'll be all right.
All right, there you have it, guys. So, like he said, we're going to take heed of the head and shoulders pattern, and we're not going to ignore that. So, I'm going to really try to highlight that and see if this ever flourishes in terms of the head and shoulders, because we want to make sure we respect all levels, patterns, signs, and confirmations. So, let me just kind of put this here. So,
Oh, I didn't even see that head and shoulders right there.
oh, you wasn't even talking about this one?
I was talking about the one on the daily chart.
Oh.
But if it's one on the daily chart, then it should make sense that we see another one on the 4-hour.
This over here.
Yep.
Oh, I didn't even peep her. That's crazy. There, you see that, guys? I wasn't even talking about that head and shoulders. And as you can see, head and shoulders is a pattern that is very strong in this pair. And like Tiberius said, if you see it's a head and shoulders on the 4-hour, most likely 9 times out of the 10, you're going to see a head and shoulders on the daily. So I like that. Actually like that idea, and I really feel confident in that. And I really feel like, with that said, I do feel confident with the short move on this one, just because everything's lining up, and if we can make sure this stays below this red box and where this area. Let me drop down. Pretty much stay below this high here and breaks below this blue zone here, we should be all good for the short move. So with that being said, we're all in for being patient and waiting for the short move to confirmate the head and shoulders. Is that correct?
Yep.
All right, we're all in. All right, with that said, we're going to move right along to the last pair I'm doing for the night before we go over our little surprise. Crypto, we're going to try to go over Dodge, because I know Dodge has really been the hot topic of the market, and I feel like that should be our responsibility to try to go over that with you guys, because I know that's really been a heavy talk in everything that you see, Twitter, Instagram, everyone. I think even Jay-Z might have said something about Dogecoin, but don't quote my words on that. I thought somebody might have shown me that earlier today. But we're definitely going to look at GJ on the naked chart. As you can see on the monthly, we've been making lower lows and lower highs. And like I said, I wasn't going to try to take out the monthly, because I feel like the monthly was a very important chart that we needed just to get the overall picture and the big idea of the bigger picture of this whole pair. So with that said, for me, I really want this W pattern to fruition and bring it all the way back up to these highs again to retest this high and do whatever it's going to do, because by then I would be out of the trade, because I would have been out of the trade somewhere here. But that's neither here nor there, because we have to see what the market is going to do where we are right now. We haven't really broken this high just yet. We're just kind of sitting at this area right now. And I think even with this area, we have up to this wick right here to add for a respect. So this is as high as the market could possibly go and still possibly turn back around. But if we can get a break of this high and this high right here, a break of this structure here and a retest, I think we should be all green lights for the buy move. But until then, we would have to only trade what we see, and we see lower lows and lower highs, and never really breaking up these high right here, and it's just kind of stuck. So we're going to drop down to the weekly. The 7 is below the 65 on the monthly, but the 7 is above the 65 on the weekly. We did get a break of these highs here, the immediate highs. This got broken. This got broken. Neither one of them got retested. So I feel ultimately if this is going to continue up, we're going to need some type of retest, or like, are you sure we're going to continue up before it does? It even got as high as these highs right here. So it has gotten up to a good, good area. And like Tiberius, I think this would be like qualified for the just good enough, even though this high hasn't touched exactly all the way up to this high. I'm pretty sure something like 10 or 5 or maybe a couple pips difference from this high and this high. So we definitely want to keep our eyes peeled for the rejection of this high and pushing it back down. Let's drop down to the weekly to the daily. The daily still shows us, strong up momentum. Nothing out of the blue. But the only thing that worries me really is that this has been showing higher highs and higher lows. But on the monthly, it's like, me unhide the signals. It's like I really wanted to go back up here, but this is possibly not possible, because just based off of history, every time it came and even touched the golden zone, it had nothing wanted to do with it and got out of there. This is the only time it came up to the top of the gold zone, rejected here, and then shot back up. But these higher highs and higher lows haven't retested anything, so that lets us know that the momentum has been really, really strong. So for the daily, I think ever since this kind of has like a little head and shoulders thing going on too. And I feel like with this shoulder over to the left, this head, and this shoulder, I would possibly want to be a little bit confident in the down move. So I think for the most part, I think whatever's in this gold zone, this pair does want nothing to do with it. And I think now we should be seeing the market push back down. And like I told you before, anytime the market is really gapped like this, where the 7 is far away from the 65 along with the market, that it always finds some way to come back to the 65 and then continue to make its move. So if I'm going to make a move, it's going to just only be to the 65. But if it even breaks the green zone too, that would possibly mean that it could possibly come all the way back down here for the retest. But let's not get ahead of ourselves, and let's just only focus on the area we are right now. Let's drop down to the 4 hour. 4 hour kind of lets us know this little wick right here, that this strong duality level, these lows lines up with this high, and then this strong bearish engulfing candle kind of lets me know that the sellers are kind of stepping in, and they're stepping in strong. So I want to be on the side of the sellers for the most part, just like I am on the AU, just because the head and shoulders pattern is really kind of strong on this pair, where this is the double shoulder over here, where this is the head and this is the shoulder, where it lines up not exactly perfectly, but it hit it good enough and it lines up good enough. And now we're going to have this strong bearish momentum candle. And this one has just now broken this little structure here. So for the most part, I'm on down on this one. Ty, tell me what you're thinking, bro.
All right, so let's pull it back out to the daily chart and let's get a clean look. I like that head and shoulders that you pointed out. I think that'll be a major turning point for this market. Because we've been going up since March of 2020. So for about a good year and a few months, we've been making a very significant uptrend. So zoom in a little bit, just a little, and hide the signals. So for the most part, we see that up until March 15th of this year, the overall trend has been steadily up. Now, March 15th was the first time we saw a real pullback that was actually able to penetrate the 7 moving average. Now, after we saw that, we kind of came into a period where the market got a little bit shady. That right there, the first top, was the left shoulder that we formed that Darren pointed out earlier. Then we had the head overall towards 153. And now we're coming up to make our right shoulder. Now, what I like about this pattern is how the right shoulder is forming. It's very similar to what we saw on AU, as a matter of fact, where the wick actually lines up with the body, but the body cannot come back up to test the overall highs that were the actual closing prices for those levels. So that tells us right there that the sellers are in the market, and they're in the market at a very, very, very strong rate. Because if the wick like that forms, that all that tells us is that buyers had enough strength to push it up, but not enough to close up there. And then if we look at the next candle, the one that we're forming right now, we're continuing to see downside action coming off of a long tail candle wick that also made a right shoulder. So it's a lot of factors right now that are setting up for the sellers. So if we break this down to the hourly chart, we can actually get a much better picture and find some levels that we want to go short from. So right now, if I'm aiming for the short, my target is that. Well, let's bring up the support and resistance lines again. Let's get some. Okay, there we go. Yeah, that's perfect. So ultimately, I would probably look to take prices back down to 150 even at first. And then if we see even better prices, I would probably say 149.75. So right now, I wouldn't go short just quite yet because we're a little bit overextended. I would wait for some type of pullback either to the bottom of the wick at 150 and 40 cents or at 150 and I want to call it 60 cents. So anywhere within that range, I'll be looking for my areas. I'll be looking for my trades. I'll be looking to take the trade once I see any type of bearish reversal pattern. So I like to use candlestick formations, bearish engulfings are some of my favorites, things of that nature. But ultimately, when we see that lower high get made, that's when I'll hop in for the short trade. Now let's take it up to the 4 hour to make sure that we're not missing anything. Nope. Overall trend is up. Right now, we're coming up to make the right shoulder for our head and shoulders pattern. If we see continuation coming out of the right shoulder, it only makes sense for us to go short. And also just analyze the point from the head all the way back down to where we're at. That's almost about 270 points in total or close to it. So whenever GJ drops by that much in less than a month, because that happened on April 6th, the top that we're seeing. So ever since that point, I think it's April 20th. So literally 2 weeks later, we see prices continuing to move down. So I think overall, the sellers are definitely in control.
All right, there you have it. So for both pairs, AU and GJ, we definitely want to be on the side of the short. We still want to be a little bit more patient. We don't want to rush the trade, and we want the trade to come to us. So with that said, we're all in for the short. All in. So we're going over the last little thing we're going to go over tonight before we move into Traders Talk. The best part of the show, my favorite part of the show. But let's go analyze Dogecoin really quick. Excuse me, guys. Is it Dogecoin USD?
Yep.
Okay. So let's kind of look at it on. It's fairly new, so I think if we move to the monthly, we're not going to see much, but just an extended candle. And we hop down to the weekly. We just get the next candle. And the daily, we just get a couple of candles. So right now, just on those higher time frames, we can't really just go nothing but off of this up extended up move, just green red type of thing. We're still in like a consolidation area, just kind of hitting tops, hitting lows, hitting tops, hitting lows. So I think if we can get it to kind of come back down here, respect this level. Excuse me. So if we can get the market to come back into this level, and maybe even hit the 7 moving average and find resistance here, I think we can definitely continue going up. But I just feel like with all the hype and all the money that's being pushed into Dogecoin, I think it just has no point but just to go up. It's still fairly new, so we're only at 30 cents. It has a possibility even getting to 60,000, 70,000. So imagine if you got in at 30 cents to 70,000, what kind of flip that would be. So I think this would be a very good investment for myself and other people who would like to begin investing. Like I said, I'm not licensed to give any financial advice, and all things being said is just all opinion and experiences learned along my trading experience. So let's drop down to the 4 hour. I think longs, we kind of just stay above this zone here. I think, I just would want to hop in, but I want to make sure I hop in at the lowest price before I hop in for the buy. So I want to see it definitely come back into the 20s. I think it has a good possibility of hop coming back into the 20s. If we could see it come back into the 20s, I definitely want to hop back in because this would be the ideal price to hop in for buyers because we want to make sure we buy low, the lowest area, and this is the low where market has been showing, resistance. And, we sell high and we're not selling right now, so this would have been a good area to sell. Like I told people who were investing that anytime you do hit another high or retest the high, you definitely want to kind of be patient and wait for the market. And being that stock, you can't really make money on both sides. You can only make money on one way. You would have if you would have bought into Dogecoin or someone would have told you to buy into Dogecoin, you would have lost a lot of money from this down move here just alone. So that's why I tell people just kind of be wary when people tell you to invest because they'll tell you to invest or put in money. You put in money here, and the whole time it's just been going down. So you want to be patient and just wait for confirmations. I know a lot of people don't know how to trade, so I'll keep that in mind as well. But let's just kind of wait for it to kind of come a little bit lower. Like I said, I wanted to come back into the 20s before I hop back in. But if it does break maybe like the 35, then I would probably just jump right on in because by then it's probably be making its move up. So this is another area. If I do miss the top, and usually I don't like to buy in at this high, but we are kind of sitting at lower levels just above the blue box. I definitely want to see a retest of this box again. And I kind of feel like since it kind of came to this box over here before, we definitely have possibilities of making it again. But this could be just that retest that it needed, and now it's just making its way up. I would even make a line even lower, even if it breaks the 7 moving average, which is right at 32, 33. Then I would kind of decide to get in. But if you do come up here, it still has a possibility of just coming up here and coming down. So that's why I said you definitely want to be patient on this. This is crypto. Crypto does move in very high volumes and very just as fast as you go up and make profits. It very well do the same thing on the opposite and going down. So I know I said a lot. Tiberius, tell me what you're thinking, my boy.
All right, let's pull it out to the daily chart. And let's hide everything. All right. So the first thing that pops out to me, just looking at an overall bigger picture of Dogecoin just in general, I know that it really started to pick back up probably around April, March of this year. So it's fairly new in terms of actual movement and bigger movement and volume flowing into it. So it's in its infancy stages. So one thing I could definitely guarantee you guys is that volatility for Dogecoin will be high. So as a trader or investor, you have to take that into consideration and understand that you will see larger swings with this pair that we're trading right now, and that can benefit you because if you catch prices at the right area, you can make some good profits. But also on the flip side, it could hurt you if you do the opposite and catch it at the wrong place. So always make sure you stay level mentally when you trade things that move with this much strength and volatility. So the first thing that I can see on Dogecoin, now that volume has started to flow into it, we see more activity. I see a big double top. If we look at the wick that happened on the huge push up, we made an all-time high of about 45 cents. Now we pulled back considerable amount back to about 25 cents. Also, 25 cents. I know you guys remember how we always talk about whole numbers, half numbers, and quarter numbers. Quarter numbers hold up on any chart, even Dogecoin. Dogecoin found support at 25 cents. And from that point on, we moved up, almost tried to test the all-time high that we made before, but we couldn't quite get there. So that's sign number one that maybe the bulls ran out of strength just a little bit. Whether that's permanent or temporary, that's yet to be seen. Now, once we made that double top and prices weren't able to get back up there, we could now also consider this point a lower high. And then after that green candle that got made that created the first lower high on this chart, we actually have a bearish engulfing on the very next candle next to it that closed as a bearish engulfing as well, but the wick was a little bit further down. So that tells us that the sellers had strength, a lot of strength, but they weren't able to close as strongly as they could, but nonetheless still made a bearish engulfing. And so far, we see a little bit of continuation to the downside coming after that candle. So all that tells us, based on all the bearish signs that we see, is that sellers are definitely in the market at the moment. But the overall trend is up, because I don't believe that the overall trend is back down again until we break the bodies for the last consolidation area. So what price is that? The one, yep, below that one. Like right above 25 at those bodies.
25.
Yeah, right there. You see those two candles?
This right here?
Yeah.
About 23 cents down here, right? For the bodies.
Yeah, what's the price for the bodies?
28 cents.
Okay. So I think as long as prices don't break past 28 cents, the uptrend is still valid, but it will be a rocky uptrend for all the buyers involved, just basing that on the daily. So let's pull it out to the hourly chart. Let's break it down a little bit. Okay, cool. So starting out, the first thing that pops up to me is the top that we made, the first all-time high, the only all-time high at 45 cents. Now, ever since that point, we've moved down, like I told you on the daily chart, and then we've moved back up. So just looking at this chart in general, one thing I can tell you is that there were definitely a lot of moves to the upside that could have been taken, even though the overall market was in a pullback. And that's the great thing about trading volatile pairs. Usually, with most pairs, we would tell you guys if the overall trend is one thing, don't try and take the opposite. But when volatility and activity in a pair like this is so large, the moves can be so significant that you could catch a nice good trade within it and still be on the safe side. So that's one thing I like about Dogecoin for sure. And I just want to point that out to you guys. Now, coming back over to the next all-time high that we tried to make, but we couldn't get all the way back. Ever since that point, look at the chart action that we've been seeing. We've been seeing lower lows and lower highs continuously. And then we just had one large down move where all we saw was red that took us back into the 65 moving average. We came back up, we retested the 7, right? And right there, if we follow it to the left, It lines up with the area that used to be a previous low on the chart. Remember our market structure lessons that we always tell you guys. In a downtrend, you want to see prices come back up, test the last low, get rejected, and then continue down to make a new low. And that's pretty much what we're on the verge of doing right now. We've already made our lower high. All we now have to do is come back down and probably retest that wick and either break through it or find support. What happens after that is hard to say, but based on what I'm seeing, I would have to lean towards more downside in the future. So if you're looking to go long, I would say be patient because with Dogecoin and things that move like this, because see, overall, I do think that the trend could go back up. If it'll break 45 cents, the all-time high, I'm not sure, but I'm pretty sure it'll be one more last impulsive move, and that's what I'm trying to wait for. But in order to catch that move, you have to wait until you see higher highs and higher lows. Because if we go back and we look at the high area at the all-time high, the first one, look at how far prices pulled back. They pulled back down all the way to 25 cents. And then they kind of consolidated on that area, consolidated, and then they finally started moving up and they just rode that 7 moving average. You had one last chance to get in with that huge wick that came all the way back down to 25 cents. But other than that, the trend was up. And that's when you start looking to buy. Once you start seeing higher highs and higher lows, then it's safe to hop back into the market and take your trades. So for the area that we're at right now, I want you guys to look for a very similar type of price pattern to what I just showed you from the last all-time high. Wait until prices start to make higher highs and higher lows before you go long. Because one thing I can tell you is that even though the overall trend is up, if you go long at the wrong place, it doesn't matter. You're going to take a loss and it's going to hurt, even though you traded in the direction with the trend. Entry points matter. So make sure you guys are patient when it comes to Dogecoin and do your thing when it comes to it because there's great opportunities and great money to be made as long as you do it the smart way.
All right, so there you have it, Dogecoin, man. So for anyone thinking about getting into Dogecoin, definitely be patient because I know Robinhood, it only lets you buy, so you definitely want to try to get in as lower prices as we possibly can. So definitely expect that 25-cent area to get retested again. If not, definitely around the 28, 25 to 30, I would say. Just to keep those cold numbers active. But yeah, we want to be patient on this one because I think that definitely the Bears are in control right now, and I can definitely see it pushing down ever since the lower lows and lower high it just made here. So we're going to be patient on this, and if we're going to buy, we're going to be patient. Selling is more active than anything. So if we're all in for sell, are we all in?
One more thing, I would say for everybody that's on Robinhood that can only buy Dogecoin, if you want to look for an alternative that would allow you to go short, think about opening up an account with Coinbase because I think Coinbase lets you go long and short, just in case anybody needs to know. But other than that, all good for Dogecoin.
All right, we're all in. So we're going to move into our final part of the show, my favorite part of the show, which is Traders Talk, which gives us an opportunity to break down the real deal about trading. I'm not trying to flash money or anything materialistic. When it comes to Forex, we want to show you the real deal, lessons, and things that I wish someone possibly could have told me because I didn't really know too many people that knew how to trade other than Tiberius. But Tiberius was went to college with me, so he was different. But other than that, I really didn't know anyone. So one thing I definitely want you guys to get take away from tonight is definitely remember that book, Tiberius. What was the name of that book for the candle chart patterns?
That book is called The Encyclopedia of Chart Patterns by Thomas Bulkowski. Bulkowski.
Yeah, so definitely just how me and Tiberius was really pointing out the head and shoulders patterns on both AU and GJ. That's just something or one of the pairs me and him got familiar with and really become to master. So I want you guys to try to pick one or two, maybe even three patterns that you guys like, get familiar with, and then just try to find pairs that have that pair. Have that setup and kind of stick with that pair. And you just master it. And every time you see that setup, you execute. So, Ty, tell the people what you want to leave with them before we bow out gracefully.
Well, one thing that I've kind of been focusing on and thinking about when it comes to the market is what's the right time to trade, and then also on the flip side, what are the right times to not trade? And I've noticed just studying my performance over the years is that one thing I've noticed is that I typically tend to have all of my drawdown periods and all of my losses when the market is consolidating on the longer term charts. So, like on the daily charts, the weekly charts, because you do get times in the market where things just slow down. So, one thing that I've been kind of trying to do over the past week or the past couple of maybe week and a half that I think could help everybody is think about ways that you can prevent yourself from trading when the market doesn't align with what works best for you. So me, I'm a trend trader. I like volatility because it gives me a chance to make a lot more bigger profits in a lot quicker time. So when that comes around, I like it. It's sweet. The market is good, but it's not always like that. Sometimes in the market, things will slow up. And if the market is only offering you 2 to 3 points, but you just came from a week where it was giving you 7 points, 8 points, 9 points, 10 points, you might get salty and be like, I'm not taking that 2 to 3. I want 7, I want 8. But if the market is giving you 2 to 3, all you got to do is take that twice. Boom. You got your 6 or your 7 that you usually get. So either adapt to the market that you're trading in or just try and sit around and wait it out until things change. And that's what I've been doing. So that's why I've been kind of quiet on the airways. I've been sitting back, just watching and observing. And it really takes a lot of discipline from my perspective. And it's really a tough thing to do. But as traders, it's something that we have to learn because we not only have to worry about being snipers and taking the shot when it's there, but most snipers, they wait 99% of the time. They only shoot 1% of the time. So we have to be the same way. And I think so far, the way the markets have been looking this week, it might be time for us to start to open it up. So with that with that being said, I want you guys to remember that in volatile periods like where we're about to see, like maybe in the next week or the next upcoming weeks, it's a great opportunity to make money, but great opportunity to blow your account if you don't trade the right way. So make sure you trade smart, you're patient, you use your discipline when you need to, and just handle your business like you're supposed to, like we teach you on here every Tuesday and Thursday, because we appreciate you guys so much, and we try and drop as much game as we can.
All right, there you have it. So please, you guys, we appreciate everyone who pulls up tonight, shows love every Tuesday and Thursday at 9:30. But please tell a friend to tell a friend to tell another friend to hit that follow button, man, and tune in every Tuesday and Thursday, man. We'll be here. We're going to be live and we're going to be breaking down your favorite charts. So you already know where you can follow me. My personal IG is at I'm the D guy, IMDGY, or my business IG, which is at Pearl underscore financial underscore LLC. Shoot me a DM. You know, we love questions. Ask us some questions. Even tell us a trade that you made that you just took from one of our lessons. You know, we're intrigued to hear from